Good morning. Good morning. Can we get a mic check in the chat? Can you hear me? Can you feel me? Good morning to you. The birds are chirping. Feel me? Let's get into it today. Alright. Currently 8:24. Fix my monitor real quick. We are getting notifications here on the charts this morning. Give me a second. Turn on the lights, cause I'm looking for you. Turn on the lights. What's going on? Good morning, good morning. Can you hear me? Can you feel me? Alright. We are getting some notifications here this morning. 8:30 is the pre-market open for the New York session, which opens at 9:30. So we're gonna restart the whole process here. I got a little setup going here on the Dow Jones index. What is the Dow Jones index made up of? It is a stock market index made up of 30 large, well-known U.S. companies. Unlike many other indexes, the Dow is price-weighted, meaning stocks with higher share prices have a greater impact on the index than stocks with lower share prices. Some companies are Apple, Microsoft, Amazon, Coca-Cola, McDonald's, Visa as a company. You know how many cards Visa makes for banks? I bet you have a Visa card right now. You're making them money. Walmart. So it says how the Dow is calculated, right? So that's the instrument that I'm trading, or that I'm looking at the moment. It says sum of all 30 stock prices divided by the Dow divisor. The divisor is adjusted periodically to account for stock splits, spin-offs, and other corporate actions. So compared to the NASDAQ, right? So the other index market you can trade. So it says the Dow versus the NASDAQ. So the Dow only tracks 30 blue chip companies, while the NASDAQ tracks 100 large non-financial companies and is much heavier than technology stocks. So I don't know if you guys know this, but SpaceX, the company, is going public this week. I believe tomorrow. No, the 12th. And what that means is they're now going to be a company that can be publicly traded. So how will StockX IPO? Is it affect or affect? I should know that, right? Oh, I meant SpaceX, not StockX. Alright, we are getting blown up by the charts here. I'm sitting here doing research. Well, yeah, basically, the Dow is another index, right? Which is a group of companies that provide tech for the U.S. So the overall value of each of those companies is put into one big pool and shown on one chart. So we are uptrending here. And what do we see, right? Let's get a deeper look. Let's zoom in. Interesting. Okay, so we have our setup here, right? What do we see? I'm actually possibly gonna be getting into this here. Let me bring this chart up here. Come on, where are we at? We are at 50. All right, here we go. All right, let's get into the 1 minute here. Let's go 5 minute. What am I seeing here? We need to close above this. So we need this alert to stay right here. All right. Here's what I'm seeing. We're actually just gonna drag this over. Drag this over. This one. We broke through this zone here, so it's not really relevant. And just bring this all the way over. All right, I get it. You're in the zone. Oh, hold up. Micro Dow. Can we get the close? All right, I gotta make sure I'm watching this. We got 15 seconds to this candle closes on the 1 minute until the 5-minute candle closes. What I'm looking for, right, is hold up. We're gonna get in here with
order
one.
filled.
And let's go back to the 5-minute. Yep. So our stop loss. We're gonna put our stop. Let's go to the we're just gonna go right below this this low here. We're gonna break this down. My fault, I had to react quick. Here we are, right? So, what do we have? We have on the left side here, right? Price come and have a drastic move to the downside. All right, so wait, let's zoom this out here. We're gonna zoom this out. Now on the higher time frame, we see that the trend is bullish, right? This is an uptrend, right? So what do we have? A higher low here than the previous, a higher high than this high, another higher low than the previous low, higher high, higher low, higher high, right? Now, although we see this next low come below the previous, right? What do we know that this could possibly be? A liquidity sweep, right? It's sweeping some orders down here to gain more fuel to be able to continue in the trend that it's already in. My light here is flickering on and off. I think that means it's dying. Let me figure something out here. Hey, y'all watch that trade for me. I can't see the screen. I don't know if anybody in here, but if you in here, hold it down. Let's see if this works. Okay, we slightly green here. What I need to see has already come, so what we're gonna do is
order filled.
add another contract here, right? And now our take profit will be set to about this zone here. What is this, the 15-minute? We're gonna set it to this zone here, but what we're also gonna do is zoom in and move this stop loss up, right? And I'm gonna bring this up to about here. Just to fix this risk to reward ratio, right? Because I'm risking 190 to potentially make 220. But if my stop loss was down here, then the risk to reward wouldn't necessarily be too well. But I'm also not looking at my setup. What are the reasons for trading on the charts that I do? I wouldn't say any specific reason, to be honest. I would just say because of me just searching on the trading view and looking to see what different instruments there are and available. And just basically watching how the volume looks and how the markets move during the session. And any markets that I have data and confidence in with trading. I try not to trade what other people are trading just because I see them having success. Not everyone trades the same instrument. Sorry. Okay, so my take profit should really be above this here. So we got 59.65. Right, because that's the top of the range before the pullback in my setup. Boom. And see, that's why my stop loss was down here, right? Because my setup tells me that it should be either below this range or below this low. And that would be 53.15-ish. Yes, look. 53.15, and that is the London session low. So there we are there. And yeah, so almost 1-to-1 here on this little setup. But depending how the volume when market open goes, right? Because it's still only 8:41, but I'm getting into this trade now because I have the candle confirmations, right? So I'm anticipating that when the market opens, the volume will carry the trade into where I'm anticipating it to go. Let me set this light up here. And look, here we are. It's doing pretty well. I literally just looked down for a couple seconds, right? Now we roughly positive about $20 there. How is that light? That's the brightest it'll get. Okay, so in this setup, right, what do we see? We have the liquidity sweep here. We had a price come down and then it went up again. Looks great. I need a haircut. I know. But priorities, right? Priorities, man. Just hasn't been in the budget lately. Taking care of these bills, adulting. 2026, man. It's crazy. If I would have stayed in school, I would actually be graduating this year. And then technically becoming an adult in the eyes of the world, right? In the eyes of the world, becoming an adult is after you're done with school or college. I disagree with that a lot. Fanatics, it's a jet. You know what it is. Alright, so for this setup here, right, what do we see? Price come down, drastic move to the downside, and then we had price come up, down again, up again, and then down one more drastic time, right? And then what do we see immediately after that? Super rise to the top with a breakout right above these highs, right? So we mark the sweep below the lows to signify that the orders below these lows here have been fulfilled, right? We blasted right through it, and then we had price shoot all the way up and then break out above these highs, right? Which is another signal or indication that the orders here are no longer, right? Because we knew at this level before, price wanted to get pushed down. We got this wick here, wick here, wick here, here, long one, right? This is selling pressure. And we know below these lows, we had buying pressure, right? We had this candle here, some wicks down here, another good candle, right? So these are levels to pay attention to in terms of price action. So breaking below these lows here shows us that this is a liquidity sweep, right? And then immediately breaking through and breaking out from this structure shows that price gained fuel from these orders here, right? And then shot up above to break through or fulfill all the orders here. So now that we had that, right, we marked our breakout structure line, right? And then we need the lowest point before the breakout occurred to make the breakout range, right? This box here. Now, within the breakout range, you need to identify where there is imbalance in the market, right? So the imbalance would just be an area or zone where we know that there are either 100% sellers or 100% buyers, right? So we marked out this zone here, right? And that type of zone would be called a fair value gap, right? It's a gap where price will, what do we see here? Gravitate towards to fulfill orders before breaking out to either the downside and continue down, or break out to the downside to grab liquidity, right? Or grab fuel before breaking out to the upside. And what are we witnessing here in real time? In real time, right? So what did I do as far as the rest of the setup, right? I marked out the imbalance, and then after that, we need to wait until price gets to its highest point where sellers step in, right? Sellers step in and create the first pullback. So we need to mark the very top of that pullback because that shows us where the buyers that were in control of the market are no longer in control, right? This was an area where where sellers stepped in. So we need the top of that range, right? And then the bottom of that range, right? So the bottom of the range being where the buyers stepped in and pushed price up, right? So we want to work within this range. And where do we want to work within that range, right? We want to work in the lower half of this range. And why? Because in the lower half of this range, this is where we can anticipate buyers to step into the market, right? What do we have here in history, right? We had buyers step in for this little pullback here after this downside movement. And then we had the sellers lose power where buyers stepped in and broke above these highs, right? Now, and closer to real time after the overnight session, what do we have again? Price shot down from the upper percentile range of this range where the sellers are stepping in, and then came down below the 50 percentile of this range where buyers stepped in and stopped it from continuing to go down. Right now, although it was only for a little bit, what this is showing is the buyers that we knew were here previously are fulfilling their orders. They are fulfilling their orders, right? So at first we had price and all the buyers step into the market and move drastically, so much that it left a gap where some buyers are still here waiting, right? Waiting for price to get back here so that they can put another order in to push price back up. So what do we see? Exactly that. Price came down, right? And it came into this zone, fulfilled orders, and now because there were no more buyers here, what did price do? Continue to drop because no one wanted to buy here anymore. So what needs to happen if no one wants to buy the $10 water bottle that you're selling? You need to drop the price. So when the market, depending on what instrument you're trading, right, falls out of this zone, that shows that there was no longer any buying pressure. So price needs to come down to find the buying pressure, right? And now what do we see? We see price come down to this point. So now this is a big candle. This is about a medium size compared to this small candle, right? So what are we seeing? We're seeing that the selling pressure is getting smaller. And then what also do we see? We see this long wick here to the downside. What does that mean? That means that price wanted to come down here, but the buying pressure that was present in this lower 50 percentile range, right, in the discount range, pushed price back up, right? And then what do we see here on the 5-minute? So that's a zoom in, basically. We see mass buying pressure stepping in, right? On the 15-minute, we get our candle confirmation, right? We see small selling pressure with a big buying pressure overpowering or engulfing this candle. So now what do we see? We see price with volume, right? So remember, volume shows the amount of contracts that are traded within that time frame. So far within this candle that is forming, there have been 1,770 contracts or orders fulfilled, right? So in the candle before it, this one here, if you look up here in this little section, I don't know if you guys can see this number. Yeah, this number next to volume, right? So look what happens when I hover over it. In this candle, there was 6,110 contracts or orders fulfilled, right? So this is confirming that we have the volume and price action within our point of interest, right, within our overall setup. So right now I'm going to set up this trade, right, and I'll set one alert to let me know when it reaches the next resistance level, right, because this is the next level where we see sellers step into the market. So I know that we can anticipate price to at least come back to this zone before more sellers step into the market. So resistance level met. I'm just gonna say look, right? And then I'll also just put that this is a good notification, because not all notifications are good ones, right? So we'll say good, and then this will be the first resistance level met. So boom, we'll create that there. And then now what I also like to do is go on a smaller time frame and then just set a more in-depth alert on the downside movements, right? Because my stop loss is on the downside and I'm anticipating price to go up. So basically what I'm going to do is, I see this was a red candle here, which would typically be a higher low than this low, which is also a higher low than the previous, right? So we're just going to go ahead and set an alert for right below this level here. And we'll say that this is a bad alert. And then we'll say first support level met. Look, right? Because then this will get me to look at the chart and see what the market structure and price action is. Then what I also like to do is set an alert for where I got into the trade, right? So right here shows where I got into the trade. We're gonna zoom this in. So where I got into the trade was here, this green bar, 56.47. So here in trading view, I'll just go ahead and do the same. So 56.40. Boom. 56.47. Crazy thing is, this was the level here, where we had that break of structure as well, right? So we had a break of structure at roughly the same exact point. And it turns out this is where my entry ended up being at a later time though, right? So literally price repeating itself and me capitalizing on what I'm realizing and what I'm noticing. And then we'll call this alert even, right? Because it'll let me know when price has come back to our break even point. Okay, so we're gonna set and forget this one, right? Because we got some other notifications going on. But nice good setup here. We're gonna see how it does. First trade of the day. It's feeling good, right? Let's get into these other alerts here. What are we seeing? Let's look at silver. Where are we at? All right. Oh, another setup here. 4-hour time frame, right? The bigger time frame, the larger time frame. What do we see? We see a downtrend, right? We see price come from up here to here. Then we have an equal high, or a lower high than the previous, right? So boom. And then we had price come down here, which kind of created a lower low than the previous low here. Definitely a lower high than here, and now a lower low, right? So we are in a downtrend. So after signifying what trend we are in, we take a zoom in, right? We click the smaller time frame and see what's going on a smaller scale. So being as though we are bearish in this market, right? This trend is bearish. There's a downtrending market. That's what our bias needs to be when looking to get into a position. Okay, so Do we have something here? Not on the 15-minute. Let's look on the 5. Okay. So yeah, I don't necessarily see anything as far as a downtrending setup, right? But we do see something for an uptrending setup, right? So I'll just go ahead and take the time to set this one up, even though we will not be getting into this trade. But for the sake of setting it up, right? Train those eyes. So what do we have? We have price come down and sweep below these lows here. Now that would be the liquidity sweep. Boom. Boom. All right. Now price came down to this point. Was I marking this as a breakout structure though? It kind of did, barely. Okay, let's look at this, right? What do we see? We're gonna set this up right here. This wouldn't be considered as strong of a setup as the one we previously did, but it would be still the same in terms of the components, right? So we got price shoot all the way up here. Let's go with this one. We got price shoot all the way up here, right? And sweep these highs. Boom. That would be the liquidity sweep, right? That would be the sweep of the orders that were resting above these highs here for people expecting price to continue to go down, right? And then there's also orders here for when price does get to this point for people to get into a trade and have it continue to go up. But what happened? They also get stopped out, right? So we need to be aware of this and recognize it to see, you know, what it means in terms of our setup, right? So we got the liquidity sweep here, and price came down, had a little bit of demand here, right? Little people stepped in and bought it back up, but then eventually we had the breakout, right? So let me delete this here. So boom. So we had the breakout structure created here, right? Price came down, broke here before going all the way up. I mean, we're going all the way back down, right? Because this is going to be a downtrending setup. So, but in real time, you guys can see that price is getting pushed up. But what you can also see is that price got pushed up into these areas and selling pressure stepped in. So what I'm actually anticipating is for price to come up above here or above these highs here before more sellers step into the market to continue to push price down. So we got the liquidity sweep here. Price came down and broke structure, right? And now we have our range of the absolute highest point before price broke structure, and then the point where structure was broken. So here, and this will be the breakout structure range, right? Now this is a downtrending setup. So next we'll be looking for any imbalance, right? So technically there would have been imbalance in this zone here, right? Because this candle, this big red candle, and then this candle, these are the three candles we're looking at in terms of the drastic move, right? So we need to find where the imbalance in that move is. So basically that would be from the bottom of this wick, right? The bottom of this candle to the top of this wick, or the top of this candle. So in this zone, we knew that there were more sellers waiting for price to get back into somewhere in this area to push it back down. Now, what do we see, right? Exactly that happened. And then what do we also see that confirms, right? So we have price shoot up and break completely through this level to show that the sellers that were once here are no longer here, right? And then now what do we see, right? Another imbalance, but to the upside, from the bottom of this candle to the top of this candle. But this candle doesn't even have a wick, right? So that means we need to use the top of this one. Even bigger gap of imbalance. And now this imbalance shows 100% buyers, right? An area where we can expect buyers to step into the market to push price back up. Now, what do we see, right? Price was finished going up in the direction it was, and it came back down into this zone. Let's delete this one, right? It came back down into this zone where we were anticipating buyers to be, and then now is doing what? Going back up, right? But this setup that we're in is a downtrending setup. And although we see all this buying pressure, I still believe that this buying pressure is needed for price to gain more fuel above these highs here before the even bigger move to the downside, right? Because our overall trend is what? A downtrend, right? And in a downtrend, we need pullbacks. We need pullbacks before it can continue. So as of right now, that is the phase that we seem to be in. And now for this specific setup, and now look, you guys can see it on my trade that I'm live in now, right? We have price going up, and what does it have to do before continuing? A pullback. Now, why is my stop loss set here? Because I know that if this pullback goes below this low, the uptrend that I believe to have been started, right? Let's look at this setup here, is invalidated, right? Because my setup for this trade checked all the boxes, right? So it needs to come into a pullback to continue to go up, right? But we know if it goes below this low here, we would be in a downtrending market. And although it looks like we're in a downtrending market, what does the higher time frame show, right? An uptrend. So we trade with the higher time frame. So boom, right? We can expect this pullback to be happening. But what we don't want to see is it break these lows here, because then that would be a new indication or a new signal that price is going to be reversing in terms of the trend. So we see some red here, but don't see red. I really see green because it needs to do that, right? And plus, it's still not 9:30 yet, right? So the New York session volume has not kicked in. So stay patient and trust the setup, right? I'm talking to you guys, but I'm really talking to myself. All right, so we got this breaker structure here. This is what we were looking at previous. What's going on? I see we got a viewer here on Facebook. We got 2 on Twitch. What's going on, y'all? I don't know if you see the comment on Facebook, but if you got any questions, ask away. Let me know if there's any problems in the screen, in the hearing, whatever the case may be. And shout out to you. Shout out to you guys for watching. Thank you guys. And we're going to take this up. Alright, so we got the breaker structure. We got our breaker structure range. So this would have been an imbalance that we would have paid attention to, but it's already invalidated, right? The sellers that we thought were there already stepped in, and then this buying pressure confirmed that there are no longer any more sellers there. So as far as imbalance goes, our next zone of imbalance we wouldn't even really mark this one either, right? Because what happened? Price shot right through it. So yeah, because of that, we can't really mark that anymore. But what can we mark, right? We can mark our premium and discount. So boom, the top of the point where, this would be, because we're in a downtrending setup. So the top of where price starts its pullback, and the bottom of where the break of structure occurred. So here's what we see, right? Price is in our desired area for sure. So, right, this zone is our premium zone, and this zone is our discounted zone, right? Now, the premium zone being the zone within the range that we're looking at, right? So the zone within the range that we're looking at where we believe price to be expensive, right? Which means sellers would be stepping into the market anywhere above this upper 50 percentile range. So typically this is what we will be looking for, but it's just not as clear and as clean as I would hope it to be. And I just mean in terms of, let's look at the trade we're in now, right? But this is this is an uptrending setup. So yeah, like what I want to see on the other setup in the premium zone is liquidity being swept before the move back to the downside for the other setup. But for this one, it's liquidity being swept before the move to the upside, right? Or liquidity doesn't even have to be swept within this zone. We really just need to see our candle confirmation, right? Align with the volume. And on this silver setup here, I just don't have it, right? We don't have anything telling us that price is gonna reverse or continue in the overall trend that we determined it's in, right? So we actually just gonna get off of silver, because making something out of nothing is how you lose money, right? And we don't want to lose money, nah, man. We work 3 jobs. Do we see anything on Russell? So on Russell, we have an uptrending market, right? But it seems as though we got some liquidity being swept here. So look, we had liquidity being swept, right? But this liquidity being swept didn't lead to a breakout above these highs, right? So that's what's the complication about this setup, right? Because we didn't have the breakout, and the breakout is essential to validating fuel being grabbed within this zone, or liquidity being swept, you know, before the upside movement. But we don't have that breaker structure. So, you know, as of right now, oh wait, well, hold on, I'm on the 4 hour. See, look, there I go. Beautiful. So look, we're on the 15, and we have that liquidity sweep and breaker structure. So, and oh, okay, well, I already had an alert here, so I did this work already. But another setup here, right? So overall, the trend in this market is an uptrend, right? So as our bias when we get into a position should be that. So now what do we see, right? Price come down, boom, sweep this low here before a drastic move to the upside and a breakout above this high, right? So that's why this liquidity sweep matters, because it led to the breakout in structure. Otherwise, this wouldn't really matter, right? It would just be another pullback for the downtrend that's continuing. But what the difference is, the breakout below this low isn't a continuation of a downtrend. It's what led to a possible reversal to an uptrend, so that it can align with the higher time frame, right? So that is the move that we're trying to capitalize on, right? That is the move I'm trying to capitalize on anytime I get into a trade. So we got the liquidity sweep here that led to the breakout in structure, right? I don't know why I started saying right, but it's I guess it's just me answering myself. All right, so we got the breakout here, right? So swept liquidity, grabbed fuel for the breakout. Now what do we look for? Imbalance in the market. Places in the market where we know that there are 100% buyers. Well, not that we know, right? Because this is imbalance here, right? This is bearish imbalance, where we would typically say there are 100% sellers, right? But what happened on this move to the upside? Not that there wasn't any selling pressure, but it wasn't enough selling pressure to stop price from going up. So it caused some wicks here, right? It caused some movement, right? So you can see there was some selling pressure, but not enough to stop it from going up. So not all imbalances have the selling or buying pressure needed to make price react the way you want, right? But it's still good to mark out those zones so that it's something you can reference just in case you see the confirmations you need to within those zones. Are y'all picking up what I'm putting down? Let me know. So, look for imbalance now, right? So we got an imbalance gap here, right? Where we can anticipate there to be sellers Buyers. So let's mark this one here. Boom. There we go. Oh wait, before we do the imbalance, we have to mark the breakout zone, right? So the zone of the absolute lowest point before price led to the breakout and to the top of where the breakout occurred, right? That previous lower high than the one here. So boom. This would be, where am I going here? So this would be the breakout structure range, right? And then this box here would be the zone with the imbalance, right? This would be the bullish fair value gap, right? So basically this gap is a zone where we can anticipate price to gravitate towards to fulfill orders that are possibly still here, right? Buy orders. Now we need to look for the next imbalance, which would be from the top of this wick here to the bottom of this wick here, right? So boom and boom. That would be another fair value gap, right? So we have our liquidity sweep, right? The liquidity sweep that led to the breakout in structure. So we mark that zone there. We have our breakout structure range. Now we marked out all the imbalance, right? The imbalance in the market that we can expect price to gravitate towards during the pullback, right? One here and one here. So now what do we see? We see the first sign of a pullback. We see some selling pressure, right? So now we have our absolute top point before the pullback and our absolute lowest point that led to the breakout before the pullback occurred, right? So we need this range, the bottom here and the top here, to mark out our premium and discounted range. Okay, so here we go again. I'm not sure who all is watching, but there are a lot of different strategies out there and different outlooks on the market and different ways people trade. And this one here has found me no problems with getting into markets to look for setups, right? So although it does have a lot of steps that I need to be checked off before I get into a trade, it's for a reason, right? Those things matter. Those things give me confirmation. Those things give me confidence in the setup. So a lot of other strategies are not as strict, don't have as many steps, or whatever the case may be. So you just got to pick what works for you, what you're okay with, and what speaks to you. But here we are, right? I got my setup here, and we are in a bullish bias, right? We were wanting price to go up, right? So we want it, but the market doesn't do what we want. It does what it does, right? So we're anticipating the move to the upside. But as far as getting into a trade for the move to the upside, we need price to get into the lower percentile range, percentile of this range, sorry. And why is that? Because this is what we call the discounted range, right? The discounted range is the range where we can anticipate buyers to step into the market and push price up, right? Because this range is where the price of whatever asset we're trading is considered cheap, right? Within this range, at least. We know that within the bottom of this range, there can be buyers that push price back up to create higher highs, right? So we want to see it get into this range before we take another zoom in and look for our candle confirmation. So we're gonna let price does what it does there. Add this alert. And this alert is gonna say in the zone, right? Because it'll let me know when price gets to our desired zone. And if it doesn't, it doesn't, and we don't have a trade. Be okay with that, right? You don't have to be in a trade in every market at all times. Right. Right. You feel me? Who we got? Who we got viewing on Twitch here? I see we got 2 viewers. What's going on? Good morning. I hope you picking up the knowledge I'm putting down. Give a little follow and continue to follow, right? I gotta record myself saying that, bruh, and like make some clips. I don't know where that habit came from. He said, right? Oh, oh, that's what you was. Yo, all right. What we got? We got about 5 minutes till market open. I'm wasting a lot of time here, showing and explaining. So you guys just watch the magic while I look to see if I have any other setups before the market opens and volume goes crazy. All right, here we go. Right, I'm still gonna explain it to y'all anyway, cause I'm just, oh, that was not what I thought it was gonna be. So this is a downtrending market, and we had the beginning to a setup for an uptrending market. Do we want to try to play this reversal? No, maybe. I don't really like taking that risk, but there are people who do and see success from it. You just need all the right boxes to check off, right? But that's not my body. That's not my body. Okay, hold up. Hold up. Because what do we have? Beautiful work. All right. Boom. Liquidity sweep here at the top. Bang. Break a structure down at the bottom. Boom. Break of structure range from the top. We'll go. Nah, we'll go because we have to go to where the break of structure occurred, right? But our premium and discount range will extend down to those points. This would be the breakout. Boom. Now we look for imbalance. This imbalance was invalidated. We had to push to the upside. Oh, you know what this looks like? Yes, looks exactly like Russell, right? Because the overall uptrending, the overall, oh, that wasn't it. Where are we at? Silver? I think it was silver. Right, because the overall trend in silver is downtrending. But there is this weird setup where the imbalances for the setup and almost I think like 1 or 2 of the steps are invalidated. So right? So we're not even going to worry about MBT. We're going to look at crude oil here. So we're in a trade already for the people who joined. And, you know, we have the setup, but I'm trying to see a new setup here before 9:30. Excuse me, before 9:30 comes. Where are we in this market? We're uptrending, right? So we need to find an uptrending setup. Do we have? Is the question. Right, so for me to see a setup, right, I need to see liquidity being swept on a downside, but then I need that next upside movement to break structure, right, which is what we kind of have, right? So let's do this on a bigger scale, and boom, right, we have liquidity being swept by these lows, right? So the fuel that was grabbed, or the orders that were fulfilled, that caused price to have this drastic move. And then this drastic move led to what, right? Break above for new highs. And I actually did have an alert here to let me know when this high was broken. So let's delete this here. And now we have our break of structure, right? And now we have our break of structure zone. Boom. Right? Now what do we need to look for? Imbalance in the market. Imbalance from the move, which would exactly be right around here, right? Boom. And it's from the very top of this little purple candle here to the very bottom of this candle here. Oh, well, no, it would be the next candle right after it, right? So it would actually be right there. Now, this setup is already developed, right? So now we need to set our premium and discount, the absolute highest point before the pullback, and then the absolute lowest point that led to the break of structure, right? So boom, here we are. And then we have our premium and discounted ranges, right? Okay, look, we got some volume kicking in here now that it's 9:30. What is going on? We have price pushing to the downside, right? Which I would hope is liquidity being swept for the upside to the movement, for the upside movement. But you know, the market doesn't care about what I hope. So we're gonna let this play out, right? My stop loss is down here. We're actually gonna put it right below that low, right? Because price may sweep the liquidity here before the upside movement. And as far as my daily loss limit goes, this is the only trade I'm in at the moment. So we'll go 375, right? Because we want to give it a little space, a little buffer space for it to at least wick down here if it has to, like we seen before. So risk to reward isn't the best on this trade in terms of the setup, but we're gonna see how the market structure and price action look when we get to this zone, right? So let me actually take that order off, and instead of a take profit, I'm just gonna add a limit sell. So basically, when price does get to this, if it does get to this zone, right, I have 2 contracts within this trade. So when price gets to this zone, one of those contracts will be sold. And then once that does happen, I will then move my stop loss up higher to the next zone that I believe should be respected before letting me know that a downtrend is going to start. But this is an uptrending trade, right? I'm in a trade saying that the market that I'm trading in will grow in value. So we'll see, right? So now that the market, the New York market is open, I want to finish setting up this setup here. So this would have been the imbalance, but we had price come tap into this imbalance once. Then we had price come tap again and sweep the liquidity here, right? For what I believe will be a bigger move to the upside, or what I'm anticipating. So this would be the bullish fair value, right? So what did we have? We had price come down into the zone that we anticipated buyers to step in, and it was also in the discounted area that we need price to be in to look for our entry model, right? So this area is the lower percentile of this overall range, right? Of this whole movement. So we want to see price come back into the lower percentile of this range before we can look for a buy, right? Because in this range is where we see buyers step into the market previously. And the same inverse with the premium of this range, right? When price is in the premium of this range, we see sellers stepping in to push price down drastically, right? We're worried about the drastic movements. So what do we have? We have price come down into this zone, and if we look on the 1 minute, yes, if we look on the 1 minute and get a zoom in, what do we see? The bullish confirmation, right? We see selling pressure get weaker and weaker and weaker as it gets into this zone. And then what do we see? Buying pressure get stronger and stronger and stronger to push price up. So we're gonna see how this candle closes, right? We're gonna see how this candle closes. Let's bring up the micro Bitcoin chart here. Oh wait, this ain't micro Bitcoin, this is crude. Alright. Where am I at? I'm right here on the 1 minute. So what do we have? Price kind of respect this support zone here, right? And I had my confirmation already, but I'm kind of late, but I'm looking to catch it after this liquidity sweep below these lows and the push to the upside. But what I need to see is that candle closure above the upside first to confirm that buying pressure, right? Because what do we see previous? We see this candle, this big red candle, have more volume than the candles preceding it, right? So what does that mean? There's significant selling pressure here, and until we get buying pressure confirmation, there would be no trade. And there maybe would for other people, but for me, I wouldn't, because there's nothing showing me that I should. So we're gonna hold out on that, right? We're gonna hold out on that. Good morning, brother. It's 9:30. The market is live. I'll go ahead and update you on the current trade we are in. Here we are. Okay, so look, we got some selling pressure cooking in here. We got some good volume here. So it's not looking too good for this trade, right? But it's all good. Let me see what other. Yes, here we go, right? Liquidity sweep, break a structure. This is exactly what I was. Oh wait, I was on the 1 minute time frame. Psych bull. All right, here we go, right? Boom. 15 minute. I'm pretty sure the overall NASDAQ, the higher time frame, is bullish, right? Which it is. So what do we see? Oh, hold up.
Order filled.
Oh, that was the wrong contract. Nice. I'm about to have to get out of that other trade because I added 2 contracts to it by accident. That's always nice, right?
Order filled.
I wanted to get in here because I could literally. Oh, let's go. Wait a minute. Zoom in here. Right below this low. Because look at the volume, right? So the volume pushing price up. And I could already prematurely see my setup here. We're going to mark it out. But I also wanted to get in just to, catch the movement that I already see is confirmed here. But I want to get into the 1 minute micro NASDAQ. Yep, this is it here. And now we're going to bring this to about 500. Just to give it a little buffer space here at the bottom. We go 499. All right. So with this setup, oh, we got an alert down for that other trade. We're even. So wait, I added 2 contracts by accident. That John's probably crazy. We about to get right up out of there. Yeah, look, I got 4 contracts in that John. Yeah, look, 762 for the stop loss. I'm not going to hold on to this trade here. You know what? We could hold on, but if I'm wrong, I want to be wrong earlier. So that way I'm risking less, right? So we're just going to go 250 here, right below this New York session low. And it's doing pretty good, right? What are we seeing here? Price going up. We got some volume for that last preceding candle. Hopefully volume continues to follow, right? What are we seeing here in the NASDAQ? Volume 167,000, 68,000. Oh my goodness, right? Volume is going up, but price action doesn't seem to be matching it, which is what we need to happen. So what I'll do here is I actually should get rid of good morning to the new viewers. We're in 2 trades here. We will be shortly circling through to look at things. I'm trying to, there we go, side by side, and then this one would be MNQ. Okay. Is this too much on the screen at once? Let me there we go. Okay. What is this? This is the 1 minute. We need to get off that 1 minute chart. Guys, Stay off the 1 minute chart. It does you no good. The 1 minute chart is not strong, right? It's just for confirmation. It's just for you to get a deeper look at what's actually going on within the 5 minute time frame. Okay, so what do we got here? We got Dow making that push to the upside, right? So in Dow, here's our setup, and we're seeing the necessary volume here, right? But in this setup, liquidity sweep here at the bottom, right? That led to the break of structure. Price consolidated in this range for a while, but eventually, what did it do? It came down into our discount zone, and it came down into our bullish fair value gap to exchange some contracts, right? It sold off a little more, but when it got to its absolute cheapest, what happened? Buyers stepped in the market, right? So buyers are stepping into the market, and you can confirm that with the volume, right? So this was about my entry point here. And now we are catching the upside movement with the volume of the market, right? Same for MNQ. Where are we at? Wow, look at MNQ going. I didn't set this chart up, but I got into the trade because I seen with my eyes that I had the confirmation, right? So what do we have? Liquidity sweep. Again, boom. Now lead to the huge move to the upside and the break of structure above this high, right? So here's that. We have our break of structure. Now that we have our liquidity sweep, and break of structure, what do we do now? We mark out our breakout zone. Right? Because we know that somewhere in this zone, where are we? Somewhere in this zone, the buyers stepped in and pushed price up, right? So this was the initial pullback, right? So this being the initial pullback, we're actually going to go in on the 5 minute. Yes, perfect. Right? So this being the initial pullback, this is the top of our breakout range, and this is the bottom of our breakout range, which would give us our premium and discount. Okay, so we got our premium and discount. Now, what do we also need to look for? Imbalance in the market. So we have a imbalance gap here, right? 1, 2, 3. These 3 candles is how you look for imbalance. A succession of 3 candles. So why? This top of this wick here and the bottom of this wick here shows a gap in price movement in which we can anticipate there be 100% buyers, right? 100% buying pressure. Where would be another one? Beautiful example. The top of this candle, this one, and this red one, right? So the top of this candle and the bottom of this one here, if we mark out this gap here, this would be another bullish fair value gap. Man, I spotted this with my eyes. No markup, right? So what do we see? Price go up into the premium zone where the sellers stepped in and pushed it back to our discounted zone, right? Where we know that there were anticipated buyers waiting to push the price up. So what do we see? Price come down and not only come into the bullish fair value gap zone we made, but also below the 50% quartile range for our premium and discount, right? So now what is the next step after these things happen? We need the candle confirmation. And what do we have here, right? Excuse me. We have this red candle with a long wick that is engulfed or overpowered by the bullish candle preceding it, right? And within these candles, what do we also see? The necessary volume to show that this move is true, right? To show that the price wants to actually do what it's doing. So at that point, when I saw it, I got right in, and look at how we're doing. Not too shabby on a Wednesday morning. Not too shabby at all. And now we got Dow showing great price action, right? Why do we feel that way? Because we see higher lows and higher highs. Higher lows and higher highs. What is also being shown? The necessary volume. Okay. So we're gonna let these do its thing. I got this limit sell up here. We're actually gonna take this limit sell off, and oh look, it's reaching it. It's reaching it. Hold on. Don't get there yet. Where we at? Alright, so what? That point was right above this high here. So this is a buy, so we'll set a limit sell for 2 contracts. Right? So basically to show that when/if price gets to this point, 2 of the 4 contracts that I have will be sold. And for M&Q, I only have 1 contract. So I'm about to see where I would be setting my take profit. We're on the 15-minute with that. Okay, so right around here is where I can expect some sellers to step into the market. And look what's happening, right? So right now I'm on the 15-minute, but this is the 5-minute, right? So if on the 5-minute, you know what? Well, you can actually take it on the 1-minute. If the 1-minute shows me sufficient selling pressure, so if I get an engulfing candle to close, I'm going to get out of this trade. We got 27 seconds. So basically I needed to close below this low, right? Because that lets me know that the bullish trend that was created is invalidated, right? The buyers that were here are no longer here. Okay, that's about equal, right? That's about equal. So we just need to see this price action. Same on the Dow. We're at about equal of the last higher low. So this is what I'll be using the 1-minute for, right? To determine if I should be exiting before my typical take profit. Because we want to secure the profits we have, right? And if we're able to get a closer look and confirm the reversal in the trend, then we'd rather take some profit than a loss, right? We got 11 seconds here. We might even come down to break even. But I'm gonna be honest, right? So look at this thing, right? Our stop loss is set where it's set for a reason, right? So we expect this pullback to come, but we know that if the pullback comes down to here, that's when the trade would be invalidated, right? So I'm sitting here telling y'all that I'm gonna get out of the trade on a 1-minute time frame. I needed to give myself that reality check to know that my trade is set the way it is for a reason, right? So I should not be getting out early and I should not be selling early because my trade parameters are what they are in the first place, or else I wouldn't have gotten into it. So I need to trust it, right? And I need to be okay with it. Okay, we got to break a structure here in gold, but I believe gold is a higher time frame bearish market. It is. Yeah. So that could be a possible liquidity sweep for a move to the downside, right? So if we get that break in structure, let's set that alarm here. BOS. And if it never goes there, then it doesn't, and we don't have a start to a setup that we thought we had, and it is what it is. Okay, we're showing a little bit of resistance to the downside here, not so much on the MNQ. Let's see this, right? And why my stop loss? 28,752.25. Let's set that alarm or that alert. What was that? 752. Uh, 752.25. There we go. So here is our stop loss for this MNQ trade. And what's going on in MNQ is expected, right? We see the uptrending movement, pullback, uptrending movement, and pullback. So here's a low, here's a higher low, and we're expecting, well, not expecting, right? Anticipating this to create another higher low. And look, on the 1 minute time frame, what are we seeing? Another higher low. Higher low, higher low, right? Things look to be going good on the front side. We just need this volume to continue to kick in. Good morning, good morning. In two current trades at the moment. We did go through the setups, so if you guys would like to see the setup process, please go ahead and rewind and watch that. But until I get out of these trades, until I get another notification for a setup, I probably won't be setting another chart up. So you guys just watch the magic. What you guys got going on today? I was supposed to go to work, but man, my job, there's just so much drama going on. I never thought that grown adults would want to be so invested into drama and just starting problems with each other and being immature. I stay out of it. I'm a truck driver. I have my CDL, and my job is very independent. You know, I don't really have to. I'm not gonna say I don't have to answer to anyone because I do have a boss and a manager or whatever. But in terms of my job, you know, I am primarily responsible for getting my job done. So I need to make sure my truck is good. I need to make sure my paperwork for the truck is good. I need to make sure my truck is loaded. I need to make sure I know where I'm driving to. I need to make sure I'm doing deliveries correctly. So, everything is purely based on me. I don't really have to rely on anyone or a coworker to get my job done. So, what's been going on is there is a new driver that joined the squad, right? So there's 5 drivers that work at the yard that I drive from, and basically this guy joined the team, and he's just like fucking shit up, bro. He's doing everything wrong. He's not loading trucks the right way. His paperwork isn't correct. It's just crazy. And I guess all my other co-workers are not happy with the way he's doing business and carrying himself. So they're letting it be known. And they're letting it be known crazily. And I'm talking about these co-workers. It's 2 specific co-workers. It's an older lady and an older gentleman. I believe they're in their 40s, and things are going wrong, and they just saying things like, "Yeah, kid," like they're saying it in a group chat that all of the drivers are in, but it's really directed towards like that new guy. And the guy is like tight. He's like, yeah, like I'm old enough to be your dad. Da 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 da. I guess because the kid left some trash in his truck, and he didn't fuel the gas. He didn't fuel the truck up after he was done using it. So that puts the next driver in a bind, because now not only do we have to get to all of our stops, but we need to make sure we get gas to be able to even get there. So I guess he was tight. The co-worker was tight about that, and they're like sending things in the group chat, just throwing subliminals, and it's just crazy to see, bro. It's just crazy to see that adults can still act the way that high schoolers do. And I just mean in terms of drama, bruh, and just like starting shit for no reason. Like, be an adult, have a conversation, and at the end of the day, everybody got to do what they got to do to get their job done. But I didn't work today, so we here streaming, because I was going to be trading anyway. Let's see here. Look, if I would have gotten into that crude trade, but I didn't, because it was already running away from me at this point. So what I would like to see is some type of candle closure above here, just to confirm that the sellers that were here are no longer there. And then I would also need to see some good volume while that candle closure occurs for me to get in to catch this trade, because it still is within my setup, right? All the things that I needed to happen did happen. It's just I didn't get in when I should have. So instead of just following it, because things could change in a second, I just need more confirmation and one thing to let me know that the coast is clear, right? So that's what we're waiting on with crude. But as far as my positions go, we're only in on MNQ and the Dow Jones indexes. And look, like I was explaining before, right? We need to see these pullbacks for healthy market structure to continue. So now if we get a closure, a candle closure above these highs here, that would further confirm that these sellers that were once here are no longer here, right? And then price will continue to go up until it finds another area where sellers want to step in. And that's MNQ, so I think it's a good time to determine where I believe that will be, right? I believe it would be above here, right? Because what do we have? We have some strong selling pressure in these areas here, right? So we at least want to watch to see what goes on at these areas. So we're literally just gonna call this one look. Delete that one there. Alright, that doesn't want to delete. And then the even closer area where sellers stepped in would be right around here. Boom. Okay, yep. So this would be one of the absolute highest points before price started coming down here, and then as we approach these areas, we can anticipate some selling to come in, as you can see here. We on the NASDAQ. Yeah, so depending on this market structure, if we get a close below here, because technically up here would be the liquidity sweep, right, for the downside movement. So if we get a break of structure down here and basically a confirmation that things are going to start reversing, then that's when I would be getting out prematurely. But otherwise, until then, we're going to trust this setup and keep things rolling. How are y'all feeling? Do you have any questions? We got some viewers here. This is the current situation. I want to do a lot more in terms of content. I don't know if you guys can see behind me, but whoever is in here that doesn't know me, I also customize sneakers. And I got this huge plan in terms of content for sneakers. I just need to get paid. I need to get paid. I need to get that money for, the investments that I want to make. But paying bills is real. Paying bills is real. And although I'm making money on this account here, this is just for an evaluation, right? To work my way to getting funded with this company to then start earning money, right? So this is just a period where they're evaluating me as a trader and seeing whether or not I can meet the target that they want me to. And once I do, they say, okay, you good, use the money, make your money. We just want 10%. So seems like a pretty fair deal to me, right? If any of you guys watching want to learn how to get started, put it in the chat, DM me any of the socials, and we can learn together, and you guys could watch as I trade and make setups with me, and you guys could learn to understand Top Step as a company. Currently my balance is 51.96 and it started at 50, right? Because this account that I purchased from Top Step was an account that they gave me with $50,000 on it, right? And this money is to be used to reach a profit target, which is 5,300. And once I reach that profit target, that's when they release the $53,000 to me, right? Not to my account, but they keep it in this Top Step account. And then I can go ahead and continue to use the $53,000 to trade with. And any profits that I make with that $53,000, I can keep. But they want 10%, right? And that's the only rules when it comes to Top Step and their trading combine. So this is a good alternate start to trading instead of starting with your own actual money, right? Because the account that I purchased from them was, I believe, $85, right? So I use this $85 to purchase an account that has $50,000. Now, although the $50,000 isn't mine, I need to get through some trials and tribulations before I can start actually making money with that $50,000, right? But compared to me using the $85 I paid for the account and just starting my own account with $85, I would be making money a lot less, right? I wouldn't even be able to get into some of these trades that I'm getting into because I don't have the money to cover it. So in terms of getting started trading, I would say download TradingView, right? TradingView is an app or a web browser. Okay, so download TradingView, and literally what you can do is paper trade, right? So on TradingView, they will literally give you a free account and give you fake money to trade with, so that you can basically have the real market data but trade fake money and practice your strategy, right? So in terms of trading, this is where I started. I started here and I was paper trading for maybe about 4 to 6 months, maybe longer than that, before I actually decided to start putting my money into buying an account, right? But this is where you start, right? So basically it's just like the Top Step account. I would go on the smaller time frames, I still do my charting and everything on TradingView. I don't trade from TradingView because Top Step isn't integrated with TradingView. Like, I can't put my Top Step account into TradingView and have it execute trades on TradingView itself. Top Step has its own trade executing platform that you need to have open to be able to make the trades. So that's why I use both, right? Because on TradingView, I can set alerts, and I really just overall like the how it looks better. But on Top Step, I can't set any alerts, right? But then what I also get as a bonus is Top Step provides these indicators and certain support and resistance levels for Top Step traders specifically that I just added to my Top Step chart just to use as reference, right? And anticipate movement depending on what my strategy is and whether or not it aligns. Alright, so what do we see, right? We have price creating this higher low here in the micro Dow. And we see these wicks here too, showing that price wanted to come down to these levels. But what? Price pushes up, right? Price pushes it back up. Let's go to Dow here. There we go. All right. What are we seeing? What are we seeing? Let's add that delta. Okay. And I also oh yeah, you can't do it for Top Step. Okay. Alright, so boom, right? Two more things I use for my chart in TradingView. So this would be the volume, right? And then so basically this shows the overall volume in the market that you're on. And this number on the right, the 80, which is now 95, 98 over here in the bottom right, that shows the overall amount of contracts or trades in that candle, right? But then what the volume delta does is it shows you who has more control within that candle. So it shows you, are there more sell contracts being converted or more buy contracts being converted, right? So this is showing the overall volume, and this is showing the delta of that volume. So within this candle, it seems to be that the sellers are in control. So the overall volume is 797, but the sellers are in control with about 330 contracts. Man, somebody's brakes. They need to change their brakes. Jeez. Big ass truck out there. Morning, Mr. Walker. Great morning, isn't it? It is indeed. It is indeed. Miles, are you picking up what I'm putting down, brother? So now what are we seeing, right? We're seeing volume is about 1.5K, but the buyers have assumed control of this candle, right? So what we want to start to see is this delta get higher, right? We want to see the buyers get in control of this candle by more and more. We got about 2.5 minutes before this candle closes on the 5-minute time frame. And same for MNQ here. Let's go to the MNQ chart and see how we're doing on the smaller time frame. All right, let's look at the 1 minute, see what this price action is talking about. So we're having a hard time, right? We're having a hard time with this support, with this resistance here. Break it all down for me again. One of these days. You know what, brother? You're here now. You're here now. So let's do it. We're gonna run this back, do a little replay, and see if there's a position that we could get into, right? So on the 4 hour, you're at work. Ah, my boy. Say no more. You see, I was getting ready to get right to it. We can't play about that understanding, boy. We need it. Man, why does it feel like World War III is going on outside of my house right now? Where's Dow? Perfect example of why to get out of the trade early. So, on the 1 minute. What are we seeing? Price come up. Sweep these highs here. Then it goes all the way down. Breaks these lows for a breakout, right? So, now, in terms of my strategy, if I was looking for downside movement, this would be the setup for it, right? So, what I would anticipate price to do, I just feel like starting for one right now, but even execute a strat. Okay, so yeah, I do plan to stream tomorrow, depending on what time I get done from work. That should be anywhere from about like, it depends. It's gonna be early because I'm gonna be starting earlier from now on. I need to, no exception. But oh, hold on here. Well, yeah, tomorrow I'm gonna be streaming around 11, anywhere from 11 to 2-ish, depending. Okay, there we go, right? We got volume stepping back in. They lucky, bruh. They lucky. If we had another candle closure below this, so there's this line right here. This is a volume line, right? So basically, this is showing where the average of contracts traded within this instrument is lying, right? So on average, most of the contracts or most of the trades are being executed within this price range. So what we see is price coming down to this price range, right? And basically testing this line before buyers stepped in and pushed it up, right? But if we would have gotten a closure below this line, like here, primarily there would have possibly been more pressure to the downside, selling pressure to be exact. But as you can see, right, so the Dow on the 5-minute chart is forming a nice good bullish candle here, and what we would like to see is this candle either match the volume of this bearish candle or engulf or oversize it, right? And on the 1 minute, that's basically getting a closure somewhere above this high here. Yeah, and if we can get that, then we can confirm that price breaking structure down here was really just a liquidity sweep for price to get the stronger push to the upside. Nice, we can see MNQ reacting pretty well. About almost $375. Not bad. Not bad at all. So I hit my look notification for MNQ, right? And that's letting me know that price has reached a previous zone where sellers stepped into and pushed price down, right? Which was, why am I on the 1 minute? So let's go to 15-minute. Let's zoom out. Here we are. Boom. So I have an alarm set for this area, right? Because it was this area before where the buying pressure got weak and sellers stepped into the market. So what I would need to see to continue my bias and show me that price wants to be bullish is a closure above this level, right? Because if I get a closure above this level, that lets me know that the sellers that were here or that stepped in at this level are no longer here. Are you picking up what I'm putting down? Just need to continue to see it. Bro, literally. That's literally why I feel as confident and as efficient as I do to even be able to start streaming and trying to explain this to anyone. Because this is literally the only way that I get into a trade in the first place, right? So because that is the only thing I'm looking for, no matter what, my eyes are trained to see it, even if I don't have my chart marked up. But you will soon get here. In due time. 100%. I will make sure of it. Okay, so we got the candle closure above this alert that I had, right? So although we have some selling pressure stepping in, what is that really, right? That's just the pullback that's needed after a breakout, right? Nice little movement here that we caught, right? We got in about here. Aye, aye, Captain. Yes, sir. So we got in about here, and we got some good price action going up, right? And then for this one, see, Dow is playing games right now, right? So we got in about here. Yeah, we got in about here. Price going up, consolidated for a little bit, and now it's looking like it wants to go back down. If we get this candle closure here, okay. So that was about equal, right? So we just need to see a further candle closure down to the downside, and honestly might just take break even here. It just depends. M&Q still doing pretty good. We had it break this low, so you know we're anticipating this to be a liquidity sweep before another push to the upside. But we will see, right? We gotta watch the price action and see what goes on. We already had the bearish engulfing candle here, so unless this candle that's forming now shows good buying pressure, which it really didn't, right? So we might be getting out of this one here. So yeah, we're having struggles getting through this this volume line. So what this volume line is called, it is volume weighted average price. Yeah, it's called a VWAP. Yeah, it's a funny ass name. I see it. I see we hit even. Appreciate the notification though. But we got to stop loss. Feel me? So go ahead. Do your thing. Do your shit. Give me another indication. Good morning, good morning. Currently in 2 trades. Getting some good movement back here in MNQ. Would love to see it hit this other alert that I have. That's another resistance area for me to see price get some sellers involved, just like we had here, right? This was a zone where we had sellers involved previous, and what do we have now? Sellers involved, and we would like to see price come up and close above this level to validate that these sellers that were here are no longer there. And look, here we are approaching. We got about 13 seconds until this candle closes, and we got some more selling pressure stepping in above this level. And there we go. We got the closure above, and hopefully the volume will continue to take us up through the roof here, right? Currently floating about 500 on this trade. Come on, Dow. You know what you want to do. You know what it do. You know what it do. Oh, you guys can hear me moving in my chair. I gotta stop doing that. My fault. Hey, y'all give me a quick second. I gotta use the bathroom real quick. BRB. All right, we got price creating this lower low here. On a 15-minute time frame, we are rejecting from breaking past this lower low, and if we close below this lower low here, it could possibly be the liquidity needed to push us back up here. But what we don't want to see is price come down here, right? If I get stopped out of this trade, it may still give us the liquidity needed to push price back up, right? We really don't know if the trend is going to reverse until here. And my stop loss would have been here, but I made a mistake and added 4 contracts to this trade. So I needed to move my stop loss up to a closer support level so that I can risk less, right? Maybe I should have gotten out of the trade, but I trust my setup, so I felt okay leaving it, and I'm okay with risking the 258 and possibly a little more, considering even if I get stopped out, the trade could still be validated, right? So if I do get stopped out of this Dow trade, I would be looking to see what type of price action is going on once I get stopped out, right? Because if price does come all the way down here and we get a candle closure or even a wick, right? Even a wick, because a wick is just showing candles on a smaller time frame. And even if I go down to the 1 minute, there's even more candles, right? So even if we get a wick to come below down to where my stop loss is, that could be the liquidity needed to push us through here. And I would, if I do get stopped out, I would be looking at the price action that goes on after I do, because if there is a bullish candle that comes after me getting stopped out, I would look to re-enter into the trade, right, to catch the upside movement after the liquidity of my stop loss was taken, right? Because right now, if I do get stopped out, that means I was the liquidity needed, right? These orders were needed to be fulfilled for it to then go in the direction I think is going to be anyway. So like, that's the whole basis of it, right? But if price comes down, closes, and then continues to go down, and we get a close below this low here, what is that showing, right? That's showing that price closed below the low that caused the breakout of this structure. So that would invalidate the whole trade. So even if I get stopped out of this one here, that may be the liquidity sweep and we may get back in, but we don't know yet until it happens. We're gonna bring this back to the right side. Oh, don't mind my lady. She on my home screen, she on my phone screen. I'm obsessed. You guys caught a glimpse of what I get to enjoy every day. She's beautiful. MNQ making the push to the downside. Yep, look, here we are, right? I'm about to get stopped out. So let's go here. Boom. MYM. That is no longer where. So that's where my stop loss is actually. 5523. There we are. Boom. So if we get price to close below this here, we need to see the price action that comes right after it, because the volume is showing price coming down, right? The selling pressure. And currently on the internal structure, we are bearish, right? So this is a pullback that is presumptually going to be needed to then push price up, right? Unless we get a close below these wicks here to confirm that the buying pressure that was here is no longer there. But the setup is still validated, right? Because the range of my premium and discount was the absolute lowest point before the original break of structure. So primarily I'm really looking for it to close below there before I can even think about saying that the trend is going to reverse. Here we are, a little bit closer. Wow, this close to getting stopped out, and we still might. Because the volume is there. Just as well as MNQ here. All right, about to hear that order filled. Then we need to check this price action, right? So let's get to this 1 minute. Okay, look, it looks like pressure, selling pressure is getting smaller and smaller. So there might be a couple more candles here, selling all the way down. And where are we now? We're back into the discounted 50 percentile range of my premium and discount, right? So now we know that we can anticipate buyers to step in after the necessary liquidity is swept. Yeah, but I'm gonna get stopped out here, and we just gotta watch this price action. Wow, look at that, right? 1 point away from my stop loss before some buyers stepped in. Can we believe that?
Order filled.
Oh, we went back down, and there we go. Right? So it needed that liquidity. It needed that order. Now what matters is what happens in the preceding candle after. Or no, not preceding, subseeding. You guys hear the birds, man? What a beautiful morning. Okay, so look, we see that this downside movement is having a sort of a pullback, right? Now what matters is what type of candle this is and what the volume looks like, right? So even if we do get a bullish engulfing candle, what matters is the volume behind it. So let's see, right? Because this could just be a pullback for it to continue to go down. Oh, and see, look. And then in M&Q here, what we got, approaching this break even. And we're waiting to see the same, right? We're waiting to see the buying momentum pick back up after it coming below these lows and sweeping out these orders here, right? Okay, so look, we have it coming here. Now we need to see the volume, right? We need to see the amount of contracts and the amount of actual buying contracts increase for it to match the price action and give us the confirmation that price wants to, you know, head back up here with some good fuel. Hello? Huh? Text me. Oh, I didn't even see your text messages. I'm still on stream. Did mom cook or no? She did? Okay. I'm sorry. I had planned to you want to take it at like 11:30? Are you able to? Ah, okay. So would you be able to do it at 11:30? Okay. All right. Let me finish up here, and I'll see what goes on. If you need me to bring you something, I can. Even if it's not in your break, I'll bring you some. Oh, she left food? Okay. All right, cool. All right. I love you. I'll text you. All right. What are we seeing here? We are. Oh, that was an accident. It's all good. Cause we're actually about to scalp on our way down to the bottom here, and catch this downside volume.
Order filled. Order filled. Order filled.
Right now, we just scalping into this downside movement here, catching this downside volume.
Order filled.
All right, what are we seeing? We're having some volume to the upside, right? Our original bias here on the Dow. I mean, well, on Dow and Nasdaq, because we were in buys in both. All right, here we go. It looks like price is looking to, start getting that buying pressure stepping in here. We got 2 seconds to this candle closure. All right, now we need the bullish confirmation, right? We need bullish confirmation that there's enough fuel for price to make its way up. But doesn't look like we're getting that, right? I want to see candle closure below this low here. Let me know that this buying pressure is insufficient. That pushed it back up, and then I'll just set a little stop loss here just to catch this downside volume. But we got about 5 seconds, and it doesn't look like it wants to continue going down here. Right now, we're just trading the pullback within my strategy. But here's what we got, right? Hopefully, we get this this bullish confirmation that we're looking for. Okay, we need volume, right? We need volume. Here we are on both the Dow and the MNQ, right? We want to see volume reach higher than the preceding red candles, right? We're actually going to get in here. We're going to buy 3.
Order filled.
And then we'll get in here and we'll market by 5 of the Dow. And here we go. We got some volume stepping in. This would be the end of the little pullback here. And, you know, like we explained previous, that may have just been the liquidity we needed, right? It may have just been the liquidity we needed to get this upside movement with the volume.
Order filled.
I'm okay until about 300 here. I don't want to risk too much. This was just a little scalp trade anyway. We had the liquidity sweep, and now basically a smaller setup within my setup, right? We had the liquidity sweep, the break of structure, and now we can anticipate some buying pressure to step in here. Unless we get price to break below these lows and you know, invalidate that short setup there. We're gonna get out of this one. It's not looking too well. I do want to see this candle closure though, right? Because this may just be the higher low. The higher low within the zone that we needed as far as the small little setup here. But I may just take break even and then just reset, right? Look for an actual better setup and just accept that things might not go the way we want to today. Still not a bad red day. We're gonna close out of this one here. Do I? We got about 700 to risk left on the day, right? Because my daily loss limit, no matter what, is 1,000, and that's what I set my account to, just to prevent myself from losing my whole account in a day. But yeah, we're looking to see some more volume here, but we are downtrending, so it may not come, and we may just get out right about here. I'm actually just gonna go ahead and put the stop sell there.
Order filled.
Here we go. Daily loss limit. Right? Now let's run it back and see what actually happened. Let's go to this log here. Okay, so where we at? All right, boom. Let's break this down. What time is it? Oh, okay. I may have to save this breakdown. Okay, but okay, so 11:02 to 11:06. Where we at? And where? So yeah, I got in a long here, and price came down a fair couple amount of points, and basically swept my order that was down here, right? And depending on the volume and how the price action looks, price may continue to just come down. But the problem with that trade was there were too many contracts, right? So if I would have had less contracts, then my stop loss could have been larger, and or it would have just been the same stop loss, like the same area, but it would have been less of a loss, right? But I had the amount of contracts I did, just scalping into the little volume movement here, which didn't work out, and which also isn't a part of my actual strategy. I was trading against it, waiting for it to get to where I wanted it to be, instead of just waiting, right? So now I know, although I may have seen successes like trading against the trend yesterday, it's not always going to work, right? And then what about that Dow trade? Dow, I messed up from the beginning because I accidentally added contracts, and then that messed that up. So I really should have gotten out of the trade then and there, but I didn't, because the stop loss that I had and the amount I was okay with risking, and really the only one that wasn't set up according to my risk rules was that scalping trade, right? Which I probably shouldn't have been in the first place, and I should have just been, more patient and waited for price to do what I needed it to do, just like here. So let me check something here, right? Because I've been having where did I enter? I entered at 9:38 a.m. and the entry price was 2901.75. Okay, so I was in 2901.75. Yes. 938. So what would that risk to reward ratio have been? Wait a minute. Am I looking at the right thing? All right. Let me zoom out of here. Okay, what a day, right? What I was trying to say was, I think I just need to alter my strategy to specific, to specific ratios, right? Instead of targeting next instead of targeting next resistance or supply zones, just because very more often than not, I see what happened today happen for myself, right? And I feel like just adjusting that one simple thing would just help me secure a lot of my profits more, and prevent me from trying to hit, the home run trades, right? The ones where you get a 4, 5, 6 risk to reward ratio and basically trying to hit home runs. I don't need a home run every trade or every day, you know. But yeah, I would say not a bad losing day. It's not a good losing day. Losing days will come, but the type of losing day is what matters, right? And I definitely learned, but I also could have been a little bit more disciplined, right? Alrighty. Well, I can't do anything anymore on my account. I'm locked out for the day. Still have a balance of let me see here. Dismiss. Boom. All right. We're gonna end it here, guys. Thanks for watching, and we'll be back tomorrow. We will be back tomorrow. GTM.